into today's trading idea, we have three. The first we have is Greatech. So Greatech has been highlighted in Traders Almanac before on the 16th May. The stock has gained about 17.7%, surging past its second target at 5.50 ringgit. As the stock peaked at 5.55 ringgit, we've seen some sort of the minor correction. And the minor correction seemed to be completed after the stock is actually pretty much staging a rebound and reversal signal right within at 33-day moving average over here, rejection right within 61.8 Fibonacci level, and those three candle over here, 1, 2, 3, forming something that we call a morning star pattern. So the only one of the concern will be is trading volume is not really that convincing. However, because of three candlestick pattern often not require something we call a validation or a confirmation from another bullish candle, we think in the greater sense of the overall trend is still looking quite attractive. If you look on the other side, it's actually bouncing off right within its support level at 44 point over here. So a fresh uptick in RSI and a stronger pickup in the trend over here, indicating that the new upcycle is actually began. So because of that, we are actually reiterating our technical buy with the new and higher target at 5.68 ringgit and 6.28 ringgit, with the cut loss also has been revised higher at 4.84 ringgit. In terms of risk to reward ratio, it was quite attractive with 6% downside risk against 20.4% upside potential. Meanwhile, for Quant, we are screening through and we found that the stock has quite high scoring, 7.8, with the Quant style of quality. All right, moving on, second trading idea would be a Tasco. Tasco is also the stock that we highlighted in earlier Traders Almanac on 9 May. The stock gained about 19.7% to peak at 1.02 ringgit, which is slightly higher than our second target at 99.5 cents. The subsequent consolidation or correction move was quite sharp, but the downside was pretty much kept within this prior major resistance, turned into a support level. So yesterday again, on the back of higher trading volume, as you can tell here, the stock has pretty much forming it could be an engulfing pattern, but these two candle has been pretty much been eat up by the yesterday candle. Trading volume improving a little bit, but it's not that excessive, which means if there any follow through for today or for the next few days ahead, could actually indicate that the ongoing uptrend set to continue. And if you look on the other side over here, multiple bounce within the key support over here, suggesting there's a plenty buying interest lurking within the current level. So we reiterate our technical buy with a new and higher target at 97.5 cents and 1.07 cents, and the stop loss has been reversed higher to 85 cents. Risk to reward ratio is 7% downside versus 16.4% upside potential. The quant scoring is similar with Greatech, which is quality, and the scoring is 6.1. Last but not least will be AZRB, Zaki Resource. One of the reasons we highlighted, because if you look on the screen, the stock is actually breaking above their 52-week high earlier on 14 June. So on 14 June, the stock has created a new higher high structure, and the subsequent consolidation saw the stock is actually validating the prior resistance, which is now turning into support level. So a completion of something that we call a return move, a signal the stock could actually resume their uptrend movement. So trading volume improving, the trend positive, and what we like is how the RSI breaking above its long-term downtrend line, now turning into a new kind of the trend for the momentum. Because of that, we're expecting the uptrend to continue backed by rising momentum, with the target set at 33.5 cents and 38.5 cents, with the cut loss below 26.5 cents. The risk to reward ratio is 1 to 3, 10% downside risk against 30% upside potential.